Hello, it's Robert Miner with Dynamic Traders Group with a short video for our YouTube followers and Twitter followers. I do one of these videos every week or two, although it's been, I think, about 3 weeks since I did the last one. Today I'm going to update the probable position and potential trade strategies for gold and for the S&P. I know they're two of your favorites, they're two of my favorites to trade. And I think the last couple of videos, 3 weeks ago, 4 weeks ago or so, is when I updated each of these two. So you can go back and look at those and see what I had to say. We'll talk about how it worked out from that period of time up till now and what to be looking for here in the next few days to a week or two for both of these markets. And as always, if you like what you hear today, hit the like button. I'd really appreciate it if you did, and subscribe so you get notified whenever we update a new video. I don't do them on a real regular basis. I try to do at least one every couple of weeks, but if you subscribe, then you'll know when we update one. That said, let's get started. You know what? Before we get started, I just want to remind you, if you're here to look for a forecast of the future, don't waste the next 10 minutes of your time. I don't do forecasting. I look at markets from a trader's perspective and for potentially some particular specific trade setups that are coming up. That's what I want to alert you to. Okay, that said, now let's get started with the S&P. Well, this is a cash S&P weekly data. Let's look at the information on this chart. And let's start at the bottom of the chart. Here's our weekly momentum cycle. And it's reached oversold. That usually warns us that the market, in this case the cash index of the S&P, should be within a week or two of completing a weekly low. What do we mean by a weekly low? We mean a low that'll last 3 to 4 weeks or more. So probably this week or next week, the SPX will make a low that'll last 3 to 4 weeks or so. Let's take a look at some time factors. Let's move up to these two. These two are important. Here's our two key weekly time factors here. And one is this high to potential low. That's this week. And the high to low is a very important time factor that usually is the maximum time before a comparable reversal to one of these reversals is made. In other words, a weekly reversal. So that's a pretty important piece of information, that more than likely this most recent net bear trend over the past few weeks is going to be over this week. And as we'll see in a minute, those actually go into next week. So we're getting pretty close to that. Here's another key weekly time factor, and that's simply the low to low to low. And that comes out this week as well. So we got two key time factors this week. Let's look at a couple other things. Not too far below the market is the 50% retracement from the August low. Everybody's going to be looking at that. And not far below the 50% retracement is the 100% alternate price projection of this February to March decline. Another area that we'd look for potentially support. And right in this area is the high that was made last February, an important swing high. And then we can see in this April-May period, there's like 6 or 7 weeks where essentially that high was the resistance. So on charts, frequently old resistance becomes support, particularly if it's been tested for many bars, which this has. So that makes that area around 41.95 also important. So for right now, on the weekly chart, about 42.08 to 41.82 would be an ideal target if the SPX is making an ABC correction, and this week or next would be the ideal time target if the SPX is making an ABC correction. Let's take a look at the daily data real quickly. Again, potential A, B, and then what's going on from the September 1st high? Well, it looks to me in Elliott Wave terms a 1, 2, and this is a real typical of a 3. And if that's the case, there should be a 4 and then a new low in the days ahead to complete, again, that weekly low in this 5 wave C. Daily momentum is overbought. It's in a position from where daily highs are typically made. So I think more than likely at least, the SPX has completed this little wave 4 correction. I got a question mark there. It hasn't been confirmed yet. But just in general, the SPX is more than likely this week or next week to make a new low, and that new low should complete a weekly low followed by a net bull trend for 3 or 4 weeks. Now, how that fits into the higher time frame trend, we don't have a lot of time for that today, but that's the trade setup to be looking for in the days ahead. So one of the keys to that will be if the SPX, and of course this isn't a forecast, this is going to happen, but if the SPX makes a new low, we're going to really be looking closely around 42.12 to 41.80. That includes that 50% retracement and some of the other support and targets from the weekly data, and it's the key 127, 162% external retracement of this little advance. Now, we don't know if that advance is complete yet, but if the SPX were to continue lower, this would be the target to complete this higher time frame impulsive decline. So what we'd look for is in the days ahead, the next daily momentum cycle and bull reversal. Now, given that the daily momentum cycle is overbought, that's usually at least 3 to 4 days before it'll make the next bull reversal. But 3 to 4 days takes us into the end of this week, and if it's a couple days longer into next week, that's what I'm looking for in the SPX and the other stock indexes over this next few days. This is gold weekly data, and I think the last update I did with gold was 5 or 6 weeks ago. It was around the middle of August, right around, I think it was this week, where my cursor is. You can go back and check on the YouTube videos and when the last one was, and you might want to review that. So what we're looking for at that time was for gold to potentially complete an A, B, C correction. Again, you can look at it, you can see the price relationships, the time relationships. You can see that the weekly momentum was reaching oversold. I mean, everything was in place to gold to be in a position to complete a weekly low. Now notice my language, it's not a forecast, that gold was in a position to complete a weekly low, and it was a setup to consider specific go long trade strategies, which we did. And boy, for about a week, 10 days there, we're looking pretty smart. However, there was no follow through on the upside, and essentially gold was sideways for about 3 weeks following the momentum cycle bull reversal. And then we all know what's happened in the last 2 weeks, which resulted in being stopped out of that long position with a very small loss. So here's why this is important to look at this data in gold as of today, October 3rd. In that it's a dramatic decline here in the last couple of weeks. I mean, last week was brutal for gold. But of course, if you have good trade strategies, and if you'd been long, you were stopped out, so no one got hurt by this. Well, where we're at right now is that nothing has changed, that this decline is a correction. More than likely, that correction will be complete in the next couple of weeks, by the week ending October 13th, which happens to be next week. That's some key time factors. I'm running out of time here to give you any details on that, but that's what we'll be looking at over the next week or so, is for another weekly low, which puts gold in a position to complete a corrective decline. So before I have to wrap this up, this is a real quick look at, this is the gold monthly data going all the way back to December in 2015. So this is an important chart. Sometimes if you lose track of the position of the market, or potentially do, and you want to move back and look at the bigger picture to get a big picture perspective, is let's just look at the last few months. The decline off of the May high on the continuous monthly data does not look so brutal, does it? It looks like a little ABC. Well, of course, it's not a little ABC, but that's what it looks like on the continuous data, which is a little closer to cash data than a single futures contract like the December contract we're just looking at. So we're looking at just a probable, typical ABC correction In this case, on the continuous contract, down to about 1805 to 1796. Now, that'd be the typical target for an A, B, C. So again, nothing is voided that the higher time frame is probably making a correction, which should be complete. Let's go down to the monthly data, either in October or November. Why is that? Look at from 2015, 32 months, the August 2018 low, 31 months, the March 2021 low, 31 months forward is October, that's this month, and of course the 32 months would be November. As you know, we've got a lot of weekly time factors here in the next week or two, so October would be an ideal month to complete a monthly low and this corrective decline. So just be aware of that. We'll keep track of that. We've probably got a week or two to go sideways to down before this corrective decline is complete, but we'll be looking real close if gold gets in a position here anytime for the rest of this week into next week to complete a corrective decline for a potential resumption of the bull trend and potentially pretty significant one if this indeed is a correction as I've got it labeled. So if you'd like more updates, go to dynamictraders.com, hit the Traders News tab, and sign up for our Traders News. There's no cost, no charge card needed. We'll just send you an email whenever we get a new update. So we do more of those updates than we do here on YouTube. So if you find this interesting, again, hit the like button, subscribe, and go to dynamictraders.com and check out also our DT report where we do these updates 3 times a week for our DT report subscribers. That's it for today. Everybody have fun, take care, be healthy, be safe. It's Robert Miner, over and out for now.